Hey, it's Nick and Keith again. I think we've had a couple videos where we've discussed really the stock side of things, also the interest rate side of things. And really for most investors, I feel like they're left with, guys, you're not giving me much hope to where to go. It seems like, it is a little bit of a struggle.
Yeah.
If rates are really
I
bad.
don't like interest rates, and I don't
stocks
like
seem really risky. Where do I go? So hoping you kind of get some light on it and maybe some options there, some ideals that they could do to maybe, where do I go?
Yeah. Well, right now, what many people like to talk about is, I need to be all in cash. That you hear that as, it's going to be awful forever or a long time, or that it's all over.
Yeah.
Come out of it, come out of hiding, come out of your bunker and put your money in stocks. And those are really bucket 1 and bucket 3 types of stories for us. But I think throughout this period, we really said, let's talk about bucket 2.
That's it.
And bucket 2 really is about having some type of defined safety net under you, and that kind of speaks to some of the discussion we have almost daily about range-bound investing.
Yes. Yeah.
You want to kind of give folks what when we say range-bound investing, Nick, what we're really describing.
Yeah. So with range-bound, really it's just providing a level of specificity around your investments where you can know how they're going to behave. I think the one thing with interest rates right now, you know how they're going to behave, but it's not very well.
Yeah.
It's pretty poor right now. Stocks, they might perform well, but you don't know how they're going to behave.
Yeah.
So
they might
not.
Poor,
yeah.
Right.
So but there will be performance one way or the other, I guess.
Yeah.
But with bucket 2, it really is providing some framework that you are comfortable with based on what your objectives are. Once again, it comes back to understanding what you're trying to accomplish.
How much run your business like a business,
Yeah.
looking at it from income production standpoint over the long haul.
Yeah. So with that, really where we've had the most success, we feel like, or at least the best understanding to provide a defined level of range is by using options-based type investments. And they come through a plethora of tools within it. But really what you're trying to accomplish there is setting parameters. So you may say, look guys, with this portion of money, I need to get to it in 5 years. With this level of uncertainty, I don't want to lose any of it, and I'd be okay with earning up to 3 or 4% per year.
Yeah.
Well, that's a range, 0 to 4. We can target that. Maybe it's, I could use this. I don't really think I need to have, I don't need the exact amount I have here, but I'd like to see earn more. Maybe I can lose up to 5, but I want to try and earn up to 8. Okay, well, that's a range. -5 plus 8. Let's solve for that. And what all range-bound investing is doing is using that. It's that intermediate bucket. When we're talking about a bucket time-based investment strategy, is you plan on using that is the ideal. So you set the range and it may be multiple ranges within that bucket. You may have a portion dedicated out for that first range of no loss up to, and then the range can just expand. Typically, what investors need to be doing is, they need to be expanding that range based on the timeline in which they're going to use it.
Sure.
If you don't plan on using money for 20 years, it's okay to have a range that's undefined. And that would be typically like a broad stock exposure.
And if you're buying quality things, if you need, people, I think often investors will want advice that one size fits all.
Yeah.
And I think in terms of clients that are young and employed right now, probably a great opportunity about looking at bucket 3 and having that undefined range. But if you're 3 months out, to the point you make is letting time work for you. Even who would like a 0.15% return in a treasury? Well, nobody, unless you need that money next Friday, and then you very much like that money to be there. And that's how we want to create a paycheck type system. So the point you make, I think, in range-bound investing is we're tightening that range based on the near, and a treasury does that perfectly.
Yeah.
But a stock can really, that range that it provides can ultimately give you that amplified return over a decade or more. It's where folks get in trouble is when they flip-flop that. They have an undefined range of the money they need in a defined period, and they have a really long period.
Undefined period with a defined return.
So they flip-flop that, and they have to always be responding. They have to define their needs based on how modify their needs based on what their investments tell them to do. They're unruly, bratty investments. they're always pushing them around.
Yeah.
And I think by defining that in very specifics, and you're just kind of graduating that over a period, will really allow you much more control in a period of time.
Confidence and clarity. I mean, I think, when you have that level of clarity with it, the confidence you can act upon, knowing when you're going to get the money and how you're going to get it is all the difference.
Yeah. And it goes back to how you arrange your coverage. I mean, if you're looking at, moving the salt around day to day, I mean, think about being a proficient cook. You got to have things. I'm not a cook, but I'm assuming. But
You've heard of salt.
I've heard of salt. Right? You got to have it organized in a way that as you need it, it's available to you. And the things you need less or less frequently,
Put it back.
Put them back. So, yeah, if you're watching and you're not a client, talk to your advisor about, again, loosening those ranges and definitions the longer you have to let the money work.
Correct.